rail fares, prescriptions, pension contributions, your pay packet. Nearly all of those things for nearly everyone were affected by decisions made by Rachel Reeves in her budget on Wednesday. We're going to be joined by two people who've basically stayed up all night and all the next morning to actually dig into all the small print for you on this episode of the BBC's daily news podcast, Newscast. Hello, it's Adam in the Newscast studio, and it is the day after the budget. I was presenting 5 live breakfast all this week, and we christened today Budget Boxing Day. Hence, lots of really lame jokes from me about turkey sandwiches and cold chipolatas and any unopened presents under the Christmas tree. So who better to spend Boxing Day with, though, than two people who really know what they're talking about and have dug into all the presents and Christmas food that we metaphorically ate with Rachel Reeves on Wednesday. Please welcome back to the Newscast studio the consumer editor of the Financial Times, Claer Barrett. Hello, Claer.
Hello, Adam.
Did the coffee machine get fixed in the FT office in time?
I got this little FT mug so I could get coffee elsewhere and bring it in. So I wasn't coffeeless, but my goodness, the leaking documents and everything else. I mean, I've never known a budget like it. One of my teeth fell out on a previous budget day. I bit into a sandwich and my cap fell off. And this last one was more traumatic than that one.
And also here is Helen Miller from the Institute for Fiscal Studies. Hello.
Hello.
And you're probably very highly caffeinated as well, having done an all-nighter.
Very highly caffeinating.
Yeah, okay. Well, maybe we can get you a FT coffee mug. Also, the leak from the OBR. I mean, I don't know if we're calling it a leak or a mistake, because it wasn't really... Because a leak suggests something deliberate, doesn't it? We don't think it was deliberate. But, I mean, what did that do for your normal streamlined process? Well,
from my point of view, I was sitting on Politics Live waiting to, hear about the budget from the Chancellor. And we basically got handed this leaked, this accidentally published document and said, well, here's the budget. Let's analyse it. So it's absolutely wild, the idea that we were sitting there with all the key information before Rachel Reeves had even taken to... I mean, my staff were thrilled. They got to a bit of a head start on doing the analysis. Yeah. But utterly amazing.
And I was watching you on TV with Chris Mason and Faisal Islam. They were reading out the budget measures, and like seconds before that happened, Delphine Strauss, one of our economics team, I just saw her sprint from like one corner of the newsroom to the other, and I was kind of like, what's going on? And then the news editor shouted, the budget has started. Yeah. And we were all sort of thinking, well, we've got 40 minutes to have a sandwich and prepare, and so it was all kind of like, right, okay, the machine must begin, the numbers must be analysed, and
I mean, I know this is the wrong way around, and this was like a bad thing that happened, but it was kind of good in a way, because when the Chancellor does the speech, it's like rat-a-tat-tat, and like, especially when it was Gordon Brown, it was just like loads and loads of numbers, and you were frantically trying to scribble them down. You had no idea what it all meant. Whereas this, it's like you had a sort of like baseline, and then you could get the politics on top, and it just made it all a bit easier to understand.
Well, there were people listening to Rachel Reeves. Is the danger that actually she kind of lost her moment in the sun because the people weren't listening to what she was saying at that point. They were just too busy, scanning the document to work out what it all meant. I think in some ways I have a lot of sympathy for her. She kind of got overshadowed to some degree.
Although I don't like a lot of what was in the budget, let me say on the record, I thought she coped amazingly well. Frankly, she coped better than I did in the newsroom, thinking, what do I do? Do I watch the speech? Do I read the document?
Multitasking,
yeah, I know.
Well, I think I was on a live exam. It was like, Helen, here's an EFO. Can you read this in live time? Tell us what it means. Like, wow, it's like a high visibility public.
Because it's hundreds and hundreds of pages long.
Her delivery was good, and she powered on through.
And she had an amazing poker face, because when Torsten Bell, the minister who sat behind her, gave her the phone to break the news to her, and everyone has zoomed in on the video, and you can't really see.
It's a micro expression.
Yeah. But she, good poker face, so full marks for that. Right, Helen, help me understand something here. The IFS has been saying for the last day or so that this is actually not a huge fiscal consolidation, which people were expecting. And it took me a little while to get my head around what that actually means. But it kind of means that the black hole in the budget that we were all sort of led to believe would be there for various reasons, whether it's the global economy or the performance of the British economy or the Office for Budget Responsibility downgrading how kind of efficient the economy is, actually turned out to be, well, not a huge hole at all, more like a little divot.
Yeah, I think this was the big news yesterday. We had months and months and months of speculation about the budget because everyone expected the OBR to hand Rachel Reeves this big fiscal repair job. And it is true, they did downgrade productivity. They also thought that actually spending was running further ahead than they expected. That was bad news. But What absolutely rode to the rescue, kind of out of the blue, was a big increase in expected revenues. So actually, by the time the OBR handed Rachel Reeves their forecast, before she did anything, there wasn't a big fiscal repair job. She had had a budget surplus of 10 billion, it had gone down to 4. So maybe some work to do, but she still had a surplus. She was still meeting her fiscal rules. What she did in response to that was choose to increase spending and increase taxes, and we could unpack that. But this wasn't something like her hand was forced and she had to do these things. She got a forecast that was much better than she would have reasonably expected.
Although you say her hand wasn't forced, and Nick Robinson made this point very well in his interview with her on Today at 8:10 this morning, that much of this was her choices. But then you think, well, hang on, some of the choices were forced on her by her backbenchers, by not letting her go ahead with the reforms to personal independence payments, the disability welfare payments. Some of it was forced on her by the bond markets, saying, actually, there's a threshold of what you can do, and everything you do has to be like funded and triple checked.
And thank goodness they remained calm.
Well, yeah, and we'll come on to that in a second. And then what was the other point I was going to make? Her headroom. So expanding the headroom, so the room for manoeuvre she had in future years, so she doesn't bust the fiscal rules. I mean, those are actually not things that she herself chose really to do. They were forced on.
Well, on the spending U-turns, I think it's right that her backbenchers, they couldn't get through Parliament. But even if you account for those, she's still in small deficit territory. So she'd need to do something. She could have put her so-called headroom back up to 10 billion. She chose to put it up to 22 billion, and credit to her for that. That should have a good payoff. That should help stop this horrible cycle of speculation. And the markets were happy. But she didn't have to do that. She could have gone lower. She could have gone to 10, 12, 13, 14, 15, and not raise taxes by more. She didn't have to spend more and tax more. They're not saying they're wrong choices, but this wasn't a chancellor whose hand was completely forced. This is a chancellor who had a much better forecast. She's been keen to emphasise that she got unlucky because she was the chancellor who was holding the public finances when that Office for Budget Responsibility productivity downgrade came. And she's right, she was unlucky. But boy, was she lucky in that this big out of the blue tax revenue increase came along. I mean, to give you a sense of scale here, before she did anything, revenues, after all of the bad news on productivity, were going to be 16 billion higher.
And that's basically because of
16 billion for free.
And it's basically because of inflation and wages and the effect that has on how much tax the government brings.
Yeah, higher inflation, fiscal drag is in full force. Inflation's higher. The OBR think more people will be dragged into tax. And the composition of growth, they think, is more towards wages than profits, and that we tax those higher.
1 in 4 people to be a higger rate taxpayer by the end of this Parliament. I mean, that's
yeah, let's get on to the many reasons why you don't like it then, Claire. Where do you want to start?
Okay, well, I mean, let's start with income tax, because this is sort of politically difficult because of the manifesto pledge. You know, did she break it or didn't she? Now, I know, Helen, you think she did. This is a tax rise in all but name. You can, quibble over the semantics and say, well, we haven't changed the rates, the percentage rates of income tax. But the fact is, with fiscal drag, that means inflation pushes up your pay or you get a pay rise. The thresholds are frozen, they stay the same. So more of your pay is squeezed into those higher rate tax bands where you're paying either 40%, 45%, or even more if you're a really high earner. And that's going to affect, all taxpayers. It's going to drag a lot of people into paying tax for the first time, take them over the tax-free personal allowance.
750,000 people by the end of this Parliament.
And by 2027, the state pension, if you get the full amount of the new state pension, will go over the rate of where the basic rate of income tax starts to kick in.
Sidebar, does that mean most people getting the state pension will have to do a tax return?
There was a little line, which I was very glad to see in the Treasury's budget document, that says they don't want that to have to happen, and they are going to do a consultation next year to work out how they can avoid this menace, frankly, for older people who may not be digitally up to doing it online. It's not impossible to do a tax return. It's not the hardest thing in the world, but if you've never done,
surprisingly easy.
If you've never done one before, I can see why it would be a worry. But I think the pensioners that I've spoken to this week, the worry for them is having a liability. They know that they'll have a tax bill, but they won't necessarily know how much it will be, and that's something that they're more fearful of than they necessarily should be.
So like an unexpected, unknowable tax bill.
So we don't want this complication for anyone, least of all older people. So we'll keep a firm eye on that, but good thing to do a sidebar on.
And another sidebar for pensioners, they escaped the slashing of how much you can put into a cash ISA. So at the moment, it's £20,000 a year.
And
£20,000 limit will stay, but the cash bit will be a maximum of £12,000.
But not until the 2027 tax year. So I predict in the near term, people are going to put more money than ever into cash ISAs, especially if they're under the age of 65. It will have the opposite effect of what she wanted, which was to encourage more people to learn about and educate themselves about stocks and shares ISAs. Now, I'm a big fan of getting people to invest for the long term rather than see their money in cash savings accounts eroded by inflation. But I think this was the wrong way to go about it.
Just pause you there for a second, Claire. Helen, that point about the manifesto pledges. So the manifesto says... we will not increase taxes on working people. That's kind of like the bold, big kind of framing they do of it. And then the sentence says, we will not increase national insurance or the rates of income tax or VAT. Why, in your mind, then, is this a breach of that pledge by Rachel Reeves?
So honestly, I think this is really straightforward, and I'm kind of surprised about how much debate there is about it. I mean, because
the government don't want it to be.
But the increase, so I think it's just very straightforward. The increase in employer national insurance last year, the freezing of the threshold, which means more people pay in national insurance, the salary sacrifice changes, more people pay national insurance. As a result of the budget measures, there will be more people paying more national insurance. National insurance revenue for the government will be higher. If that doesn't mean more national insurance, what does more national insurance mean? I mean, this is straightforwardly an increase in national insurance. I think just full stop. I mean,
I'm just thinking, what would Rachel Reeves say if she was here? I think she would say, well, hang on. In the tax system, with inflation and wage growth, you will always have a situation where the amount of national insurance in pounds that is gathered by the government is always going to go up, just mechanically.
Yeah.
And she would argue that this is just the amount of national insurance that the government's getting going up because they haven't put the rate of national insurance up on anything.
They did for employers last year.
They did for employers last year.
But not for working people,
but
though.
that has catapulted onto workers in the form
but also, if
the jobs market.
If that argument was right, then Rachel Reeves' measure yesterday wouldn't have worked. I mean, why is it that she's been able to find, whatever it is, 8, 9, 10 billion? It's because had she not made a change to the system, then she wouldn't have been getting that revenue. So that, I think, it undermines the argument. Like the fact that this has been work for her. She did something, and that something led to higher national insurance. Whatever that something is, something that doesn't really matter because she didn't specify in the manifesto. And they did specify for income tax. For income tax, they specified rates. If they had meant no increase in employee national insurance rates, they could have written that down. If that's what they meant, were we supposed to guess that, to just intuit that that's what it meant? Because I just read it as no increase in national insurance. We have seen an increase in national insurance. Now, I'm not making a statement about whether that's right or wrong, but in terms of like the fair use of the English language, I just think it's just
this is like turning into like an English seminar now, and I did
Oh.
geography at university. And right, Claire, let's go back to your list. I was gonna use a bad word there. We're all quite tired because of the budget, but your list. What's next?
Okay.
Things you don't like.
All right. So I don't like the changes to salary sacrifice, which is going to affect higher earners predominantly, but
So basically, you take a chunk off your salary, it goes into your pension, and at the moment, you and your employer don't have to pay any income tax or national insurance on that chunk. But if you go beyond £2,000 of pension contributions in a few years' time, the level above that will attract national insurance.
So I don't like these changes to salary sacrifice. The only thing I did like about the budget announcement is that they're not going to happen until 2029. Now, we knew that there would have to be a delay. It wasn't going to be immediate just because it's so hard for companies to make these big changes to their workers' pension schemes and their payrolls, because pensions are a part of our pay. And no more so than in the private sector, which is the majority of companies who use salary sacrifice are in the private sector. Our pensions are less generous than people who work in the public sector. Tend to have final salary schemes where you're given a guaranteed income on retirement. You're not given a pot of money that you've then got to invest and eke out for the rest of your life. So we're already at a disadvantage in the private sector, and this is going to disadvantage us further. We know from Friday night in the FT, we did a story about how a really big poll of large employers said, this is going to cost us more money and we are going to have to get that money back from somewhere. Lo and behold, 1 in 3 of them say that they would reduce the level of money that they're paying into staff pensions going forward. And around half of them said that they'd look at cutting other benefits. I mean, that could be anything. You know, I mean, my worry is it could be parental leave and things like that, where some companies have a really generous policy and other companies do the bare minimum. Are we going to see more companies doing the bare minimum in the future on pensions and things like that? But at least it's not happening until 2029. And interestingly, Sir Steve Webb, the former pensions minister, who's an absolute legend, explaining how stuff in the pensions world works, if you follow him on LinkedIn, and a lot of people do, the commentary that he put up today saying if you give employers until 2029 to work out how they can work around this, they will find workarounds. And the idea that you're going to backload £3 to £4 billion worth of income from this, he doesn't personally think that it's going to raise anywhere near that sum. And this is also a problem with the income tax changes. You've got front-loaded spending, but backloaded tax collection, and that backloading with both of these policies is quite perilously close to the time of the next general election. So with all that you were saying, Helen, about, she's building a bigger buffer, I agree. And I think most of the business leaders who read the FT would also agree that that's a sensible decision, because we don't want this repeat of this doom loop of budgets every year. But will that give her the opportunity, if she has achieved economic growth, which is the magic ingredient that we're all searching for in all of this, to then say, OK, well, our next manifesto pledge for the next general election, we're actually in a position now where we can not do these things. We can unthaw the thresholds, or we could look again at swindling cuts to
especially if there's a repeat of what's just happened, which is where government receipts from tax were better than people thought because of inflation and wage growth. Also, Helen, it's interesting for you because you're not just an economist, but you're the boss of a charity with employees. So you're going to have to grapple with what to do with your employees' salary sacrificing pension contributions.
We will, yeah. I haven't
you don't need to discuss that.
But we will.
Let you say that for a team meeting in 3 years' time.
But there is an oddity here about, whether you think they're right or wrong, salary sacrifice is this kind of odd beast. And it sits between employer and employee contributions, where employer contributions, which is what we're talking about here, don't get national insurance applied to them. Employee contributions do. So actually, there is an unfairness in the system in the sense of some people can access salary sacrifice contributions.
And you can also use it for childcare vouchers and a bike, can't you?
For other things. But pensions is the big ticket item there. But not everyone's employer offers that. So there are some people who don't have access to that. So really, salary sacrifice is this odd bit of the system. What the government's done is move a boundary. So now some salary sacrifice contributions are taxed like employer contributions, some are taxed like employee contributions. What strikes me is what is the plan? Why is there a big tax difference between employee and employer contributions? I could make a case for different treatments of them, but as in go one way or the other, but not to have this big gaping tax difference between them. And therefore, this seems like a bit of a niche. I agree it's got problems, but the bigger question is, what are we doing with the tax treatment of pensions? Answer that question first, then we could work out what to do here.
I agree. And also just the general sort of tenor of news coverage around pensions in general. Like before the budget, people were worried that there could be cuts to how much they could take out of their pension tax-free when they retired. There were worries that there could be other changes to the amount of tax relief that people get. But all of this is just eroding trust in the pension system. And if we're relying on people to not cause a burden on the state in retirement by not saving enough, we need to incentivise and encourage them to save more, but also give them faith that if they are putting this money aside, if they are sacrificing it from their salary, or if they're just making pension contributions in the ordinary way, that they are going to get a fair deal later on, because you're taking the government on trust that they're not going to massively change the rules. And this is the biggest problem I think we have with pensions.
Although again, not to sound like Rachel Reeves, like the robot version, but the biggest tax break for your pensions is that your contributions are free of income tax. That's a huge, big tax break for all pension contributions for everyone, irrespective of what kind of scheme they're in.
And they can grow tax-free.
Huge compared to
But without being want to be a pedant, although I do want to be a pedant.
Please do.
They're not free of income tax. So it's a free of tax on the way in, taxed on the way out.
Sure, okay.
So the difference, but I think this is important, the difference with employer...
I'm just thinking because it's a long way away from me.
It's deferred, exactly. But that's where the employer contributions are different, and there's no national insurance on the way in and no national insurance on the way out. That is very generous, and actually the degree of the subsidy is pegged to the employer and employee national insurance rate. Why is that a parameter which should be changed? So I think there is a reason to change this. We won't go into all the details here, but I think it should be that absolutely agree here. Like, there should be a bigger picture. What are you trying to do? Give people the certainty of the system. Reform it in a way that's sort of driven by what you want to do, not by I move this boundary, I get a few more bill and I'll do that.
Right, let's talk about who is affected and who's not. Claire, you've written a thing about, it's a shame Henry Zeffman isn't here, because you've talked about this group called the Henrys.
Yes.
And just to be clear, that is not people called Henry. Henry is...
Some of them may be called Henry.
Well, statistically, yes.
But yes, Henrys and Henriettas, I've said, because it's men and women, high earners who are not rich yet.
Hence Henry. Yeah.
Exactly. So these are, our young talent in the workforce, people who are working on high salaries but haven't sort of achieved the financial milestones yet, whether that's like getting married, starting a family, buying a house. They're moving up the career ladder. And if they work in tech or finance or other high-paying sectors, then they may well be on a salary approaching the £100,000 mark. And this is becoming a real pinch point in the tax system because, as Helen, I'm sure, will correct me if I get this wrong, when you start to earn over £100,000, you start to lose your tax-free personal allowance. The first £12,500 roughly of your income you don't pay any income tax on. But go over 100 and the government starts to claw that back. So you've got an effective tax rate, income tax and national insurance, of 62%. So that's 62 pence in every pound that you earn, or more if you're repaying a student loan, because then you've got an extra 9 pence that's going back to the exchequer. So the demotivational effect on workers who are earning a lot of money, but then all of a sudden they're not. They want to avoid that trap. And it's doubly so for parents, because £100,000 is also the point in the tax system at which you start to lose help with childcare. Now, I should point out, it doesn't pay for all of your childcare. It subsidises some of the cost. And if you lose the majority of that subsidy, as you do when you go through £100,000, the IFS calculated for the FT earlier this year that for a family with 2 children in nursery in London, which is the most expensive place on earth to put a child in nursery, if your salary went £1 over 100,000 and you lost your childcare hours, you'd actually have to earn more than £149,000 to make up for the loss. So a really big kink in the system, and people are distorting their behaviour, either working fewer hours, turning down shifts. This is going to be a growing problem for the NHS, by the way. We've had lots of people write into the FT about that. And now we're extending this freeze until 2031, by which time another 500,000 people roughly will be dragged into this.
But Helen, Nigel Farage yesterday, the Reform UK leader, he said this budget was an attack on aspiration. And I think what he was getting at there was it disincentivises you to do extra hours or push for a pay rise, because in some cases, so much of that, because of fiscal drag, will be taken away by you ending up in a higher income tax bracket. Claire mentioned a few examples of people's behavioural changes there. Is it really that much of a disincentive? Because you still do earn, you do an extra shift, you still earn extra money at the end. It's just not the full amount, and you might pay a bit more tax than you would on your other hours. It's not zero, and it's usually not negative.
Yeah. So taxes are going up, and overall you would expect higher taxes to mean overall people do a bit less work. Now, it's going to vary across different types of people. You're right, most people will just maybe grumble a little bit and carry on doing what they were going to do. The point is,
bank their overtime, which they're still getting.
But there will be some people, and actually the kinds of people who tend to be more responsive are things like single mothers who are deciding how much to work, who may be working part-time. Do they take the leap and go a bit more part-time? People who are near retirement think that, do I actually keep it going a few more years or do I step back? People who are at certain points in the distribution where actually they are facing particularly high marginal rates. Maybe mothers coming back to work and deciding whether to go back full-time or part-time. So it's not that everybody responds by working less. It's that overall you expect responses. Now, look, I don't think that we'll get huge responses from this budget. But it is, the point that actually higher taxes come at a cost is true. One thing I'd point out is that, some of those costs you can't avoid. There's kind of a fundamental trade-off. You want to tax people, you want to tax rich people more for progressivity. You trade off progressivity versus work incentives, basically. But there are other cases where actually we are making the trade-offs. We don't have to. A great example of this is the government is going to increase taxes on dividends, property income,
savings,
savings,
interest.
And actually, you can make a case that the fact that those things are taxed at lower rates than employment income creates some problems. But the way those taxes are designed means they discourage investment and savings. So now you've increased those disincentives. If you'd fixed the underlying tax base in ways that I won't go into detail, then you actually wouldn't have that trade-off. So in some sense, the government hasn't done itself any favours by not going further and stopping some of the things it has control over.
It's added a load of complexity.
Well, yeah, and as in the mansion tax, as well as a very complicated extra bolt-on to the council tax system, and the EV pay per mile tax system, which is my new obsession, is going to be really complicated.
Even I haven't completely got my head around
you basically have
the EV changes. If you're a hybrid and you're petrol and electric, how does it work?
They're getting a different rate.
There's a different rate, but also you will still have to pay fuel duty on the petrol bit. But anyway, yeah, we've several years for that to work out. Helen, just quickly, the battle of the charts. This always happens the day after the budget because, I mean, you guys at the IFS do your take on it. The Resolution Foundation do their version of it. And they were looking at that chart in the budget book, which Chris Mason was quoting last night, which shows on the Treasury's figures that the top percent of earners, the top decile in the income spectrum, they're the ones that are paying more as a result of this budget. Everyone else on every other income level is a beneficiary. But the Resolution Foundation were pointing out that chart, which the Treasury is very proud of, includes decisions made at the budget last year and also assumptions about how much people benefit from public services. And therefore, if you're spending more on public services, which the government is doing, you get more benefit. And they sort of turn that into a sort of financial kind of benefit for you as a person. What's your take on whether it's correct to say that the richest are paying as a result of this budget and everyone else is kind of okay or better off?
So if you just look at the tax side of things, it's quite straightforward. I mean, basically everyone's paying more right across the income distribution, but the rich are paying proportionally more. So it's progressive. All of the tax measures are tilted towards top of the income distribution. That's absolutely true. Of course, it's always the case that taxes are spent on something. And part of what that Treasury chart that you're describing is doing is trying to show the effects of the things it's spent on. Now, the kind of obvious example is the removal of the 2-child limit. That tends to be families obviously on lower incomes with more children. They'll have a direct financial gain from this budget. And more broadly, if you take account of the spending that will be done as a result of higher taxes, then public spending benefits tend to skew to the bottom. But if you're just thinking about who's going to pay more, everyone, but the richer you are, the more you'll pay.
Okay, right. We've only got a few minutes left. I was talking yesterday in Newscast about kind of unexploded bombs that are buried away. And I think actually I've realised on reflection that's not a great metaphor because bombs are horrible and we probably shouldn't be kind of like chatting about unexploded ordnance. But I'm not sure what the other metaphor is. Anyway, we're all too tired to come up with new metaphors.
Unravelling,
U-turns. Yeah, is there a thing, Claire, that you think, this is not going to last, or actually this is going to grow? This is a little seed that's going to grow into like a big like carnivorous plant.
I mean, I think we're going to get a lot more blowback on the cash ISAs. It just seems to be, it's not going to raise very much money and it is going to upset a lot of people under the age of 65. And just this whole question of like intergenerational fairness comes into play. They've also said...
And do you think even people who've got a lot less than £13,000 a year to save?
I think it's the principle of telling us what we can and cannot do and limiting the amount of... cash savings that you can put in an ISA while at the same time increasing the rate of tax that you apply to savings interest in other accounts. You know, it just seems like that's not something that's going to die down and go away. It's the most popular savings product in Britain, a cash ISA. And the building societies have been very vocal in why they don't like it. They think that it will affect mortgage lending if less money is flowing in. I totally believe that more money will flow in because it will have the reverse effect than the policy intends. It would be really lovely if there had been some proper measures to incentivise people to look at stocks and shares ISAs, you know, a carrot rather than a stick, because I do think that this desire of the Chancellor to create a nation of investors is the right one. But then by attacking workplace pensions, that's going counter to that measure too.
Although it'll be so interesting to see how the banks and the financial service providers respond to this and what sort of apps and products appear to get people's investment money.
And we will see innovation.
Because it'll be a goldmine,
Yeah, we will see innovation. I look forward to reporting on that, and I'm sure that there will be good things that will flow out of it, but there will be a lot of noise.
Yay, more banking apps to check.
Banking apps are great.
I love banking apps. It's my highlight of my day, looking at all my 10p of investments in 10 different banks.
Can you remember the world when we didn't have them and you had a little
I remember the world when the most popular
printer.
savings product was a piggy bank.
Oh.
Right, Helen, what was the metaphor I came up with? A seed that is going to grow potentially into a carnivorous plant.
This is already a fully grown plant in some sense, but special educational needs and disabilities.
Yes, glad you mentioned this.
Big area of spending has been increasing. We already knew it was increasing hugely. Has left councils with eye-watering sums of debt that are currently being squirreled off balance sheet and not properly dealt with.
But risking their bankruptcy.
Yeah. Government now basically having better forecasts of that spending. Good, more transparency. Bringing it into central government to try to manage it. That could be a good move. But that is a serious pressure for the future. So roll forward a couple of years. What will we be sitting here talking about? The government will do another spending review in 2027 saying, how do I allocate money across departments? It's going to have big pressures on the NHS, defence, courts, local government, special educational needs. It's currently penciling in some cuts overall as part of this budget and saying we'll just absorb the special educational needs costs somewhere in the budgets. That's going to be tough to do. So I think keeping an eye on that and important remembering, you've also got to be reforming that system and not just letting it spiral out of control.
Yeah, and it's interesting. I mean, it's a huge issue and there's going to be that big review next year. So it will come back with a vengeance, as well as being an important thing for parents and children themselves.
Massively important.
Yeah.
The people who are using it, this system is not working. It's such a hideous thing. I mean, if you're the parent of a child with special needs, that is a huge burden for you to carry personally anyway. But then the admin, the fight that you have to put up to actually get the support that you're entitled to. I've got many friends who are affected by this and it's really, really tough.
No one's happy. Teachers aren't happy. Parents aren't happy. Children aren't being well served. However much money you want to spend, the government has to find a way to better serve the needs of young people.
And back to where we started with the OBR, I'd only clocked what a big deal this was going to be for the government's finances in the next few years. I mean, I knew it was a big deal as a concept, but in terms of from this budget, because the OBR put out a correction to one of their figures, which was the knock-on effect on the mainstream schools budget for per pupil funding of central government taking on a lot of these SEND costs from councils. And in theory, it could mean a 5% drop in how much spending there is per pupil in mainstream schools as a result of this decision. And so that is what kind of alerted me to just what a huge deal this is potentially going to be. And actually, while we were having that discussion, I've just checked, and actually the Department for Education has pushed back on those calculations by the OBR, and they say that the extra spending on SEND from local authorities will be absorbed within government spending overall. In other words, it's not correct to say that it will just be from within the school's budget. And so you'll have to take from mainstream schools to spend on this SEND stuff. It will be the overall government budget. And also the Department for Education says this doesn't take into account the reforms they're going to introduce to the system when they do their review next year. Right. Thank you very much. Claire, I'm glad you're fully caffeinated and good luck with fixing the office coffee machine. Although you've got that lovely mug now, FT branded mug, that means also, you're probably going to want to drink out.
I've just noticed that me and Helen have got the same shoes.
Also, and we've got blue dress, black tights. We've come in some matching little
tax ladies,
like Charlie's Angels. Except they all wore those catsuits, didn't they? Charlie's Angels.
I missed the red now.
You don't have to do
I should have done better next time.
And Helen, thank you for staying up all night as well to crunch the numbers.
My pleasure.
And that is all for this episode of Newscast. We'll be back with another one very soon. Bye-bye.